Well, good morning, everyone. Welcome to our Wednesday morning trading room, and hooray, my data problem is finally sorted out. Don't ask me why it took so long to get resolved. It just did. But everything seems to be in order now, so we can get back to normal. And again, I apologize for the inconvenience. Uh, I don't know. For those of you who know me, I'm good at breaking things that are tech related. All right. So it looks like, here we'll just do a quick little review of what's been going on. It looks like here now the NASDAQ, which is my personal favorite market to trade, has been on a tear the last 3 days. You can see some very, very bullish looking bars. And now we're getting back here to the contract highs and things a little bit reluctant. Yesterday's session, just a pure doji bar, and today the market opening a little bit below there. So it's very likely we're going to see a little bit of a rally up, and then the market maybe try to drift down, maybe get back down here to around 7,100, and maybe even turn right over and threaten this support area down here. That, of course, all longer term. It may take a few days to unfold, but it's always good to have a broader perspective of what's going on in the marketplace. Looking now here at the overnight, fairly bullish through the overnight, a little bit of a pullback before the market opened, and now another rally up and a retest. Is that the overnight high at around 72.65? Yes, it looks that way. I see we have a few new people in the trading room here this morning. Welcome to you, and let me just give you a quick overview of what you're looking at. This here is the diversified trading system along with the NASDAQ. So here in the top left, I have the Hawk Microscalper top right, Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and then the bottom right is the Raptor. I'm watching the NASDAQ here, but I will pull up any market that you're interested in on my other monitor. I've also got the Russell and the Euro going. Oh, I think. All right, at any rate. We'll give them a few minutes here to settle in this morning. Oh, is my data right? Or is it still... Oh, fun and games. Let's see. Oh yeah, no, okay, I got the right timestamp. All right, let's, like I said, I'm going to give them a few minutes here to settle in, kind of get their bearings. Actually off to a fairly bullish start this morning, big rally up out of the open. Scott says, hey, I've had some data problems too. Can you share what happened to you and what was the fix? Well, what happened to me is I just couldn't connect. All the data that was streaming, it was delayed. So somehow I got bumped off of the live feed. And the solution, I don't know. That was all on Kinetic's end. I just kept after them until they got it ironed out. In fact, I think some of it still isn't right, but we won't worry about that right now. The NASDAQ seems to be behaving correctly, and that's the one I spend most of the time with anyhow. I made the mistake, I suppose, of making some changes, and you should never change your data. It's a little bit, you're just asking for it, just asking for trouble. Okay, I think I've got everything working correctly now, I hope. All right, so we've had a little bit of a flurry higher. That does seem to be the trend here at the moment. We had some early signals. What time is it? We're only 8 minutes into the session. Looks like we're going to produce a late filter entry signal here on the Falcon. Now, the late filter entry signal occurs when your trend line goes out of sync, comes back into sync. The filter goes out of sync, comes back into sync. The trend line itself never changing color. And this one's also fairly flat. I could set up for this one. So I need this next bar to finish green. That's going to flip the filter over. It's a little bit early in the day for me, but here we go. We'll see whether they get up there. You could, we're getting another warning dot. Okay, and now the signal prints. Oh, good, no slippage. I should point out the market opening with a rather large gap, right? So there is going to be some downward pressure. So the market leaving off up here and then opening down here. So we got a pretty big upside gap. We'll see whether they try to fill that. Now the trade actually starting to produce a little bit of a trend change signal. The challenge on this one is going to be keeping your stops far enough back that you don't get tagged too early. This is one of the reasons I'm not a fan of trading too early as well. Usually I like to let opening range kind of dwindle a little bit, let the market kind of get all this early stuff out of the way, see which way the trend is forming, and then try to trade accordingly. Well, hopefully the buyers will recover shortly. I hate digging a hole for myself right out of the open. And it looks like that's exactly what I've done. We're back into the hard edge now on the Eagle and the Raptor. So we should anticipate some sort of reaction here. So we did produce the number 2 signal, which is the counter trend signal. Come back to the hard edge. We would be looking now for some sort of reaction, which would actually produce a number 3 signal. Or in this case, probably a number 1 signal because the clouds have gone out of sync. So the next signal that produces will probably be a number 1, providing the market can rally from here. Sorry, Dan. I was sitting on my mute button. Dan says, "Is sound working?" What I was pointing out is that ideally you should keep your stops 2 swings back. So this was swing number 1, and this is actually swing number 2, way down here, but I couldn't pull that off. That was a little bit too far. So I took my chances. Again, I'm not holding out too much hope here at the moment. We are getting the market in a little bit of a twist, though. Where, okay, we're still here at the hard edge. So again, whenever we encounter the hard edge, we're looking for some sort of reaction. We've got a green bar sell here on the Eagle. So if the market can get above this last swing high here around the 72.64 zone, there's a pretty good chance that we'll see the market try to rally. If the market gets below the 72.55 swing low, there's a pretty good chance the market will try to head lower. So an opportunity perhaps for an OCO order, that's your bracket trade. Let's go back here now to the Raptor. If the Raptor continues lower, it's going to produce a number one signal to sell. If it goes higher, it's going to produce a number one signal to buy. And yeah, just got tagged out on that little reverse. Oh well. That's what I get for those early trades. The worst part is because this hard edge reaction, the market may actually end up rallying from here. It's rare for a late filter entry signal to fail. This is normally a very, very strong signal. Oh, actually, the filter never came into sync. Oh, my bad. See, I was a little bit too early on that entry. On a proper late filter entry signal, we want the filter to go out of sync and then come back into sync. You see, this was a late filter entry signal to sell. See this? So your trend line does not change color. Your filter goes out of sync, comes back into sync, and then the signal completes and the market, well, hopefully gets low enough to at least find your profit objective. This one, the trend line never changed color. The filter is out of sync, but it never came back into sync. So my error. Now we're just kind of in limbo, bouncing back and forth a bit. Trying to get some sort of direction going on. Still here in the hard edge of the trading band. And this is, again, when the market encounters the hard edge, we do anticipate a reaction. So that's why we use it as a profit target. This now is an early, what I would call an early number one signal. Let's see if we get a second push opportunity on that. Let's see if that's going to peel back a little bit. All right, so it came down a little. You could wait for a bigger reaction. By a bigger reaction, I mean something like this. And what I'm going to do is I'm going to stretch my profit target a little bit on this one, just because that first stinker that I took. Okay, so the early number one signal comes about when the clouds are almost fully crossed. The full number one signal will not actually print until the clouds are actually crossed over. So here's your number one signal. Your clouds have crossed. They've gone from bearish to bullish. They are fully crossed. There's a little bit of a pullback, and then the signal parameters continue in the direction of the trend, and your signal prints. The early signal has pretty much the same parameters, except the clouds are not fully crossed over yet, but you can see visually we're like 99% of the way there. I think this is probably a good time to go to break even. So we're 99% of the way there. There's a little bit of a pullback, and now the signal. You could also interpret this as a bit of a sloppy hard edge bounce. Now I know this is a little kind of borderline discretionary type signal, but these are the kinds of things that you're going to learn to look for. Now that the clouds are fully crossed, we're getting this pullback, and now we have a buy warning dot. This will produce the number one signal if the market continues higher. If it continues higher and maybe gets into that opening gap, which could be quite substantial. That opening gap was way up here. Actually, maybe we'll go for that. So the opening gap was somewhere around 73, 73 even. You can see this is our median line. This tells us we're in the middle of our support and resistance lines. This now is primary resistance, and below, of course, is primary support. When we break the primary resistance area, it's not unusual to see the market try to move a couple of zones. And so the first zone would be up here at 72.90. The number one signal now, as I mentioned, because the cloud's fully in sync. Okay, the high of the morning at 72.73 is going to be a hurdle, but if we can get over that, there is a chance we could see the market continue higher. Hey, good morning, Mark. Mark says, good morning, Eric. a little late getting in the room this morning. I've got a lot going on this week, getting ready for an extended 2+ week exercise with the Army. My last one, yay. Yay is right. Oh gosh, that doesn't sound like that much fun. Took that last late filter entry for a decent profit and still in it with a runner. Let's take a look at that one. We were just talking about late filter entries. Oh yeah, right here. Very nice. I got knuckleballed on the first one here because I did not wait for the filter to turn over. And I got into this one a little bit too early and ended up sucking up a bit of a loss. Unfortunately, well, if my stop were just a little bit deeper, I'd still be hanging on. The late filter entry, though, on this side, you can see how the filter came back into sync, right? That's very important. And the trend line dead flat, that's a very good sign as well. Yeah, Mark says, whoops, that'll get you. Yes, it sure will. So they're thinking about it. We're kind of deliberating here just below the highs of the morning. And I chose to try to run this one out. We'll see. We'll see if that was a good idea or not. I think they got one more push left in them, maybe. Now producing the counter trend signal. And this gets kind of interesting now. Is this a counter trend signal or is it a bigger with trend signal? Because as we saw on the daily, especially from yesterday's fall off from where the market left off to where it started, that's actually a little bit of a downtrend starting to develop. All these questions. So I'm sitting at break even, looking for some buying to come back into the marketplace. And are they going to give it to me? Come on. Nope. No, they are not. So this whole 72, 70, 72, 73 area, really, really sticky. All right, let's throw that on the shelf for now. All right, here they go again. Now we're actually seeing a breakout above the high of the morning. And we'll see if we get a little bit of a reaction there that may offer an opportunity to get in. Notice here the eagle kind of given that broader view, these red bar buy signals, because the eagle is the eagle, these red bar buys now with the nice follow through. So had the right idea, unfortunately did not have the staying power on that last trade. Had my stops up at the break even. Okay, a very big first micro macro cross now on the hawk. And first micro macro cross signal right here. It occurs when your micro lines and macro lines cross over. It's the first signal where everything is in sync. So you've got green bars, green trend lines, green filter, and of course a green signal. And with a scalping target, it's usually pretty easy for the market to reach that objective. And after that quick little rally, we are falling flat yet again. Our Raptor cloud probably getting a little bit overextended here right now. So let's take a look here at the cloud. Top of the cloud seems to be around 72.78. Bottom of the cloud 72.68. That's 10 points or 40 ticks. Well, it's not super wide. Oh, there you go. There's your number 2 signal. I was just going to say, as that cloud gets wider, you can anticipate a counter trend signal, and the market objective for that signal would be a retrace back here to the hard edge. So when your cloud starts to get about 40 or 50 ticks broad, it does open itself up to a reversal. See here how wide the cloud got. You produce the number 2 signal and then the pullback. Not a big fan of the counter trend, but let's see if they give a second push opportunity here. The second push, again, simply means we allow the signal to engage, and then we see where the market reacts. So if we print a bullish bar here, it kind of gives us a better level to short below. And if you think that bar is bullish enough, and you want it to enter earlier, you can set up your trade like so. Now with counter trend trades, you're going to place your stop above the swing high. Don't place it 1 tick above the swing high. Chances are that the market may thrash about a little bit still. Counter trend moves are not usually smooth. Did they slip me a tick again? My goodness, we're getting some slippage going on here this morning. I'll see if I can't get that tick back. And counter trend trades always riskier. There's just no two ways about it. A counter trend move is always risky. The only good thing about a counter trend move is you definitely know you're wrong when the market trades above the high. The bad thing about a counter trend move is it now blocks you from taking a with trend signal. So if we come out of here and we produce a number 3 signal to buy off of the hard edge, well, we're already short. So when you do take a counter trend trade, you want to be reasonably confident the market is ready to reverse. Nelp's asking, Eric, do you place a stop limit or a stop market order? I usually use the stop market, but of course that does open you up to the possibility of slippage. A stop limit, you can limit the number of ticks you will get slipped. The NASDAQ doesn't normally slip me, and if it does, it's usually a 1 tick or 2 tick slippage, which is probably what I would set my stop limit at anyhow. If you're trading a market with potentially huge slippage like crude oil, you'll want to set that at about 2 or 3 ticks. Come on now. Okay, hooray. So a little bit of a move back to the hard edge. And I think with counter trend signals, while they do have the potential to make a big run out, it's probably to your advantage to take profit on target. Okay, back again into the hard edge. The tools are a little bit more mixed this morning, aren't they? We've got a hawk right now that's a little bit more bearish. Certainly a falcon that's also trying to stay bearish. The eagle and the raptor maybe a little bit more on the bullish side, but not really strong. Well, I suppose the eagle is fairly strong. Here comes now the raptor with the number 3 signal. This is the hard edge bounce, and you can just pop into that signal. And what I would do is leave my stops back here, at least below the last swing. Ideally, again, 2 swings back. This is a continuation signal. So we're looking for the market to continue the trend of the morning and perhaps even challenge the high of the day around the 72.85 zone. I'm watching a couple of the other stock indices, and they haven't been quite as active as the NASDAQ has. The Russell and the E-mini both kind of flat for the most part. What I'm going to do is I'm going to bring my break even now to the high of this bar. So on the next push, on the next bullish push, the trade should roll up to break even. There we go. And hopefully now we get a little bit of follow through. Come on, buyers, let's go. As you can see, I do have two contracts going on this trade, so I took profit on one, which is always a luxury when you're able to trade more than one contract. And now that we are above this swing high, I'm just going to see if we can hold, and then I'm probably going to move into something like a parabolic. There we go. And try to protect a little bit of that open profit and maybe, just maybe, catch onto a bit of a runner and see whether the market doesn't try to get into that opening gap, maybe pushing the market even as high as 7,300. Wouldn't that be nice? That'd be a really good run. Nice way to round out the morning. All right, there was a little bit of you can see a little bit of the hesitation here. I'm also using the indicator warehouse dynamic equivolume bars. So the wider bars actually show me that there's more trading going on. There's more volume in these last two bars than we've seen in about the last 6 or 7 bars leading into that. That means there's a lot of sellers trying to push the market back down here and a lot of buyers countering back. The Geiger counter keeps trying to pull here to the sell side, but hopefully, oh, here we go. We're getting a little bit of a buying spike come through, and hopefully that will keep us on the bull side and maybe even a little bit of a push through from this. How are we doing? Not bad. All right, so the parabolic's doing a fairly decent job holding me in this trade. The parabolic's a more aggressive stop strategy. So when the market starts to slow, the parabolics will bring the stops up rather quickly. The downside, of course, is that if the market hiccups, you may get tagged prematurely, but it looks as though the market had a little bit of a decision point, and if they break the support zone here that we've kind of established around the 72.82 zone, then they will probably try to drift back and retest the hard edge. So it'd be a good place to take profit. And of course, if they continue higher and push on through this 72.86 region, here, maybe if we give it a little bit of a push with the mouse, we can get it up there. Come on, let's go. Then the next resistance zone here is 72.90. A very real possibility. Ooh, after that, the next one, 73.14 half. That might be reaching a bit. All right, they're close here. We'll just push them up over the 72.68 hurdle. Come on, let's go. Get up there. All right, here they go again. There we go. All right, let's see if there's some follow through from the break. Ah, Mickey. Welcome. Mickey says, I'm new here. What is that indicator that is shadowing the last bar with either a green or a red line? All right. So this little line right here, this is actually part of the Geiger counter. The Geiger counter is it's essentially a tape reader. So you can see how the order flow is. But it's not always easy to watch the Geiger counter and what's going on. So the Geiger counter will also print either a red bar or a red envelope or green envelope around the last bar to give you a short-term bias. So right now, the short-term bias on the market is bullish. And if we watch the Geiger counter here, it seems fairly balanced. We've had some orders come through here on the buy side. Looks like the seller's not countering. But with the Geiger counter, you can see the needle a little bit more bullish at the moment. And what I like to watch for is when this dial pulls and sticks. So I would like to see it pull over here to the buy side and just stay there for like 3 or 4 or 5 seconds. That would show me a flurry of buying has come into the market, and then I would expect some follow through on the bars as well. Most of the time, however, it's going to be fairly balanced. You'll see the buyers buy a little, the sellers come back, and so on and so forth. Likewise, if this pulls and sticks to the short side, that tells me it's time to really get my stops in tight because the market may make a bigger move to the short side than I would like to see. But yeah, that last bar, that envelope that you see printing around the last bar, that has to do with the Geiger counter. Okay, you see how we're pulling here to the buy side? Ooh, we were pulling to the buy side and sticking for a couple seconds. Now we're pulling here to the short side and getting a little bit sticky. Come on, buyers, where are you? All right, you see the sellers are really laying it on thick. Let's see if the buyers can come back from that. At this point, if I wasn't already in parabolic mode, I certainly would consider it. I could even go with something like the bar high-low strategy, which I can make ultra aggressive, perhaps capture a little bit more open profit. Look at the flurry of buying that's going through here and how they overwhelm the sellers. Look at how little selling was going on relative to the buying. The seller's trying to counter back now. You see how the dial really holding here now to the short side, and that red bias line around the last bar. Okay, a little bit of a pullback. Like I said, the bar high-low strategy, very aggressive, so we maximized our profit there. You can see here now the Geiger counter getting even more bearish. Look at how the bulls overran the bears there, and now the sellers really stepping it up. So the market reacting to that 72.90 resistance line. And that was pretty decent trade. Yeah, no, thank you for asking, Mickey. I know there's a lot of people in the room, and if you have questions, you should ask. That's why I'm here. Honest, that's why I'm here. All right, possible pullback again. Things slowing a little bit as we're halfway through the morning. All right, well, things gotten really slow now. The market again with a little bit more of a bullish bent to it right now. Okay, back to the hard edge, a slow, semi-painful drift. Out of curiosity, let's see, how big was that band? So 72.87. Oh yeah, I guess it would have been around 50 ticks when that signal printed, or just before that signal printed. 12 points, 48 ticks. And we produce the counter trend signal and the slide back to the hard edge. Not quite all the way to the hard edge just yet. You can see the big selling. It could have been profit taking as well. Maybe not active selling, because look at what happened afterwards. The market just kind of evening out again. All right, well, we'll throw that back on the shelf as well. Mark says he passed on the late filter entry signal that printed here. It wasn't flat enough for him. He's being a little extra selective. I do think it got down to the profit objective. Yeah, just tag the profit target. Certainly gave you the opportunity for a break-even trade. Mark says, yeah, the market context had him sitting on his hands a little bit. Getting another possible late filter entry signal here to short. So the filter's still out of sync. All right, so now the filter coming back into sync. And here I'm gonna actually hold my stop back above that swing high. All right, I'll force the trade to break even at this point. Come on. You stinkers. Get down there. Nope, not quite. The market getting a little bit more structure to it at this point. And perhaps I was a little bit quick with the stop there. It was looking promising for a moment. Of course, we're back in the hard edge now, where we probably expect a reaction. Okay, so that counter trend move having a little bit more follow through to it. And it's starting to look like maybe the overall bias is shifting somewhat. And we're getting perhaps a continuation of the downtrend from yesterday. Yeah, so it turns out I was a little bit quick with my stops on that late filter entry signal, as the market did continue lower to the profit target. It's a little unfortunate. All right, let's see. We may get another early cloud crossover occurring here. Again, the cloud's not fully crossed, but they're almost all the way there. We are producing the warning dot here on the rafter. We don't have the completed signal just yet, but definitely a little bit of a bearish bias starting to creep into the market. Or is it? All right, it's probably going to take them a few minutes to sort this out, so we'll just hang with them for now. All right, so we'll see. Yeah, good morning, Ted. Yes, it is tough trading this morning. I've had a couple of good trades, but kind of slogging along. Okay, we might get that early number one signal, that early cloud crossover. Okay, we'll see. We'll see if we get the signal here. I might give it a go. And so far, we're not getting the follow through. All right. Well, that may be it for this morning's session. The market kind of falling flat after chopping around a little bit. These clouds will eventually cross and confirm. So this, again, the early number one signal, or looking for a possible early number one signal. All right, well, it doesn't look like we're going to get that signal. So we're going to wrap up shop here for the morning. If you are going to continue trading, it almost looks like we're going to enter a little bit of a sideways trading range here. I am a little bit more bearish given this last move lower. I would not be surprised to see a little bit of a bigger retest of the highs, but the market really backing off as we got closer to that 7,300 area. All right. I will see you again tomorrow. Have yourselves a great day. Bye for now.